Hi there, welcome to Nepi Invest. As Olivia Newton John once sang, let's get technical. Well, she didn't sing that. She's saying, what was it? Let's get physical, but close enough. Let's do a technical update video focusing on indices, commodities, Bitcoin, maybe even Ethereum, and we'll do a Palladium for Anderson, our South African friend. Also, have a look at bonds and then we'll finish up looking at 13 individual companies' charts, including a few I do own. In fact, I think the last five companies I do own, it's actually in the last seven companies I own. And I'll talk about why I have included those companies in this particular technical update video. And hopefully it'll become quite apparent. Now, what I'm going to do in today's video is focus on weekly charts for the indices, commodities, and even Bitcoin and bonds, and maybe the daily charts for the individual companies. Now, I do like to focus on weekly charts when I look at the indices because, in my opinion, daily charts, there's a little bit more noise there. Another reason I like to look at weekly charts because you can definitely see the trend. And right now, the trend is positive for the Australian market. So this is the XJO weekly chart going all the way back to 2016. Even if we zoom out, the XJO has been in an upwards or uptrend channel since 2009, and only twice have we the XJO fallen below or above the trading channel. And in fact, it's a almost perfect trading channel apart from those two times. The first time is understandable. That was during the COVID-19 financial panic when the market completely overreacted, and it's understandable. Fear is much more powerful than greed, and we saw that in February and March of 2020. And then we saw the rapid rise, a rapid correction, a rapid V-shaped recovery. And in fact, the only time we've gone above the top of the trading range was in August 2021. So just over 1 year later. And that period from March 2020 to August 2021 was a great time to be an investor. And the XGO only went above the top of the trading range for a brief period, maybe a few days. 1 week was above it, the next week was below it. And ever since then, we've remained in the channel. We've been as low, very close to touching the bottom of the channel back in June. Well, actually, it wasn't June, it was September, October of 2022. And right now, we're probably not in the middle of the trading channel. We're probably towards the top half, but definitely not near the top of the trading channel. And I think if we were near the top of the trading channel, I would be a little bit more bearish. But at this point in time, neither bearish nor bullish. But when you are thinking long term, definitely we are in an uptrend. Not we, the XGO is an uptrend. Now, as we turn our attention to the XSO, which is the small ordinaries, a little bit of a different feel. There's really no upwards channel here at all because the top of the XSO was actually way back in 2007. So that was a great time. In fact, the 2000s was a great time up until 2008 was a great time to be invested in small caps, and we have not reached those peaks again. Not even close, to be honest with you. The next high was back in late 2021, just before we started seeing interest rates rise, and that was 3,600. So we're still about, was it 20% off that? Yeah, about 20% off that right now at 3,010.8. Now, you could probably argue that we are in this trading channel since about middle of 2022, so not very long. And the XSO tried to get above it a few months ago, but failed. And we're right at the top of this trading channel. And the bottom of it is about 2,600, so not much of a depth in the trading channel. And we have seen the XSO hit that bottom 3 times. So at this point in time, not quite as bullish as the XJO. And I think a lot of investors out there are waiting for a little bit of movement in small caps. Now, if you just take the bottom here back in October through to right now, we have seen some good movements in the XSO, but we want to see that continue. And I would love to see the XSO get above the heights we saw a few months ago, which was, if I just decrease there, which was around about the end of March, start of April. Who knows? I have no idea which way it's going to go from here. I can't read the future. The charts, even though the charts are backwards looking, and you can get a little bit of an idea which way they might move, it's all about probability. So right now, I'd probably say there's a good chance the XSO would move higher, but that's not an absolute. It could move lower here. It could be a black swan event. Maybe we discover there's a meteor heading straight for Earth that's going to collide with Earth in 1 year's time, and that's the end of civilization, and the markets would absolutely collapse, and I would quit work that very day. Let's have a look at the American market. It's not going to happen. The probabilities of that happening, for those who are fearing that, probably of that happening is 1 in 1 trillion or something. It's probably less than that, actually. It's probably less than winning the lottery. Yeah, now that I think about it. Now let's have a look at the American markets. And this is why probably this is probably proof. Is that the good word? Yeah, this is probably a good reason why investing not only in Australia but overseas markets is a good thing, because you get exposure. That's the word I was looking for. Exposure to companies that are growing very quickly, that have the potential to have a long runway of growth at that. And so we're looking at the NASDAQ right here. This is the US 100 index NASDAQ NDQ. There's also an ETF NDQ on the Australian market. And this is a beautiful looking chart. In fact, the Dow Jones is beautiful as well. So again, this is the weekly chart. How could you fault this chart? In fact, if you go further back, you have to look at the log chart here, because if you know anything about mathematics, you can see it starts to rise exponentially. That's why you need to look at the log chart. So let's actually have a look at the log chart. Logarithmic. And yeah, there we go. I wouldn't say it's a straight line up, but yeah, this is why you invest in the stock market over all other assets, in my opinion. This goes back to 2007. And in 2007, in fact, the GFC is just a blip here, isn't it? The GFC is just a blip. And back in 2007, the NASDAQ was 2,000. Now it's 18,000. It's increased ninefold over the past 17 years. In fact, let's go back to 2004. 2004, the NASDAQ, this was just after the tech bubble burst. The NASDAQ was down as low as 1,600. Even at the top of the tech bubble, NASDAQ was only 4,600. So we're 4 times that right now. But a beautiful looking chart, the log chart for the NASDAQ, exactly what you want to see. And I'll just show you again the normal chart, the rhythmic chart, whatever you want to call it, regular chart. You just see why you need to look at a log chart when you're looking at longer time frames. And if you don't understand this, leave a comment, and maybe I'll explain it in another video. Even though I'm not actually, I do have a minor in mathematics, but not a major. Anyway, so that's the NASDAQ. Russell 2000 is probably fairly similar to the XSO. I'd say this is fairly similar, but not quite. The peak in the XSO was actually, let's go back further. Was this peak? No, nothing like the XSO. In fact, over time, the Russell 2000 has been increasing just like the NASDAQ, but not quite at the same rate. So even the linear chart here, or the rhythmic chart here, is virtually a straight line up. So if you actually look at the log chart, it'll be like a smoother, not a smoother curve. What do you call it? A flatter curve. Yeah, flatter curve. Anyway, so in the shorter time frames, yeah, regular chart's okay. But if we focus on the Russell 2000 in the shorter time frame since about 2002, fairly similar to the XSO, there is this channel, and right now the Russell 2000 is just above that channel. So I'm actually a little bit more bullish on the Russell 2000 than I am the XSO, just because it does look like the XSO is wanting to move into an uptrend. And finally, the Dow Jones is fairly similar to the NASDAQ. Really bullish on the Dow Jones. This is the Dow Jones Industrial Average. Was it 30 companies or was it 20? I forget now. In fact, I've never actually looked at what companies are in the Dow Jones Industrial. Dow Jones Industrial companies. Here we go. So JP Morgan Chase, Apple, 3M, or Triple M, probably 3M, Dow, American Sugar, General Electric, Disney, DuPont, American Tobacco Company, Honeywell, Amgen, and here's a Dow 30. Amazon, American Express, Amgen, Apple, Boeing, Caterpillar, Cisco, Chevron, Goldman Sachs, blah, blah, blah. Intel, Johnson & Johnson, Coca-Cola, McDonald's, Microsoft's in there, Nike, Procter & Gamble. Most of these companies are well-known names: Visa, Walmart, Walt Disney, and Dow. There you go. That's the first time I've really looked at the Dow 30. I'm assuming that was the Dow Jones Industrial. So that's probably a good reason. You can see some of those companies, there is an overlap between the NASDAQ and the Dow Jones Industrial Average. And that's probably why there is a bit of similarity between the two. So NVIDIA's not in there, though. Anyway, let's have a look at some other markets. Nikkei, this is the weekly chart again for the Nikkei. It's still not quite, it has pulled back from the records. Remember, there was a lot of chatter about Nikkei getting to record levels and getting above the levels back in 1989, 1990. That's this dotted line, this dashed line was the highs back in 1989, 1990. And it briefly went above that. Well, actually, not briefly. That's like 6 weeks went above it. And then a little bit of a dip below. Now it's going back up. So just a little bit of a dip in the Nikkei 225. And I have to actually go to this watch list to have a look at some of the other indexes. DAX, I'm assuming this is pretty good. DAX is looking really good. The FTSE, still looking pretty good. Actually a negative week, but that's okay. If I haven't talked about how all these indices have performed in the past week, and the Hang Seng China 500 index, negative week there as well. In fact, let's just go back quickly, have a look. XJO did have a negative week, down about 1.11%. XSO was down about 1.1%. NASDAQ was up. NASDAQ was up 1.4%, but the Dow Jones was actually down at 2.3%. So there was a little bit of difference in the past week between the NASDAQ and the Dow Jones. And I'm wondering how much NVIDIA affected that, if it was mostly NVIDIA, because if you have a look at the NVIDIA chart, it did really well in the week because they released their results. And the results were quite stunning, better than expected. This is the weekly chart for NVIDIA. And NVIDIA went up 16%. Is that right? 15% in the past week. Now, this video is not on NVIDIA. So that's all I have in regards to the indices. I probably could show you again the Djibouti index, but they don't have a market. They don't have a stock market in Djibouti. And I think I should correct that one day. So let's have a look at commodities. We'll start with gold. Gold did have a bad week, a negative week. And if you do own any gold companies, you'll probably see some of your gold companies fall a little bit, or maybe a lot for some. In fact, gold was down 3.3% for the week. And as we turn attention to the daily chart, it's not negative. It's just a little bit of a correction. You always see this. When anything's in an uptrend, you always have these little corrections. Now, the main thing is 5 days ago, was that the Monday? We had the all-time high. Yeah, on Monday, we had an all-time high. And now we've seen a little bit of a dip. We don't want to see a lower low here. We want this to be the low, and we want to see gold rise again and get to a new high. So that's what we want to see. High highs, higher lows. Once we see the previous low broken, that would be potentially a negative sign of moving forward. So still bullish on gold. 2 bad days of the week, but that's not negative in itself. You're always going to have corrections. Uranium is still above $91. If we have a look at the weekly chart for uranium, we did see uranium have a pretty big dip. Went from above $104 all the way back down to 84. And I think the bottom has been reached in that little movement. And that little movement was about 2 months ago. And now it's trending slowly higher. And I did notice quite a few uranium companies, charts look really good. Boss Energy looks really nice. Again, this is the weekly chart. Yeah, let's just stick on the weekly chart. Weekly chart looks beautiful. Boss Energy. Not Peninsula. What was the other one? Paladin. What's Paladin? PDN? Helen looks pretty good as well. Bannerman, I'm pretty sure this one looks pretty good as well. Deep Yellow, I'm probably missing. What's Deep Yellow's T code? I thought Deep Yellow was DYE. Deep Yellow. DYL. Oh, there you go. TYE. What's TYE? I don't know. I know. So the moral of the story is quite a few uranium companies are looking good, except for Peninsula. So I do have a look at these companies on occasion, and Peninsula keeps doing cover raisings, and this chart looks complete opposite. So hopefully you have not put any of your money into Peninsula, and instead put it into Boss Energy, Paladin, or any other of the uranium companies, because Paladin is near the bottom. Let's have a look at copper. In fact, we'll stay with this. Copper, just like gold, had a negative week, but that's okay. In fact, copper was down 5.9% for the week. So let's turn attention to the daily chart. So in itself, this is not a negative thing. It's not the end of the uptrend in copper, because when you have a look at this particular daily chart, it's still a beautiful uptrend. I think it's just copper just got a little bit ahead of itself, and this is just the pullback. We did have that major selling on the Wednesday. Copper was down over 5%, 5.04%. In the last 2 days, down a little bit, but I would probably suggest this is just a little bit of a dip, little bit of a correction, and hopefully the uptrend in copper keeps on going. And I'd love to see copper turn around positive in the next week. Nickel, let's have a look at the weekly chart for nickel. Looks pretty good at this point in time. A bit of a movement, nice movement, nice uptrend developing in the weekly chart. It's gone from below 1,400 to 1,714. So rumors that nickel industry or nickel market, whatever, is screwed is probably unfounded at this point, just based off the movements we have seen in the past few months. And quite a few nickel companies are doing fairly well. Nickel, pretty sure this company, Centuris Metals, is, you can see it bouncing now. I'm pretty sure this company is a nickel explorer in Brazil. I'm trying to think of tin. Well, Nickel Industries, NIC. It's looking pretty good. Chart looks pretty good. Again, this is potential buy the dip situation. Share price has moved to the short-term moving average channel, and that could be a sign to buy into nickel. There's probably other nickel companies out there, but yeah. Oil downtrend. I'm calling this a downtrend. It has moved from $88 down to $77 during the past 2 months. The high was the 5th of April, so we are talking about the last month and a half. Has moved down, and this is a downtrend. It's broken through the uptrend back on the 1st of May, and it's continued to falter. What's happening with oil? I have no idea. Still, the amount of money we're paying at the pump locally, it still suggests that the oil is at $500 a barrel, not 77. So someone is making an mozza for us overpaying for oil or petrol right now. I'm not suggesting oil companies are doing that. I'm not suggesting like Viva Energy and Ampol doing it. I think someone along the way is getting a little bit more money, or their margins a little bit higher than usual. Silver. Well, you would have said chest and know that because gold and copper have pulled back, particularly gold, that silver has pulled back, but nothing to be concerned here with silver. This is just like we saw in April. You just see silver pulled back and a beautiful move into the short-term moving average channel and then pulled higher. In fact, you could say, just by looking at this chart, there could be even a little bit more to fall before we start to see a bounce. And in fact, this was a beautiful technical signal here. Silver got to the top of this trading range, $29, pulled back to the bottom of the trading range, and then pulled higher. It's beautiful, just absolutely gorgeous. What else can we have or see here? Coal. Coal is the slowly moving, trying to develop uptrend. I've been looking at this for quite a few months now, and it's trying to move in an uptrend. So there are a few coal companies on the ASX. I shouldn't have to tell you what they are. For instance, we have Whitehaven Coal, and I just had a look at Whitehaven Coal chart overnight, and it is just going sideways, just volatility going sideways. And this doesn't quite mirror coal prices, but there's just going sideways. I think New Hope, New Hope, was that bullish? Trying to get bullish? No, not quite. Maybe it was Yancoal. Yancoal, YAL. Yeah, Yancoal was starting to look interesting. Yeah. Natural gas. Yeah, natural gas has gone on a nice ride in the past month or so. And palladium. Oh, iron ore. Can't forget iron ore. Iron ore looks pretty good. Not bad, not horrible. Looks pretty good. And lithium still flat. And of course, palladium, our favorite commodity, South African commodity. Nothing to report here. Still in the downtrend. And I can't forget tin either. Tin, I think we have to look at the weekly chart for tin. Here it is. And tin still looks pretty good. Tin looks good. And cocoa, ooh. Let's look at the daily chart for cocoa. I think the top has the read reach. And I think this is, if I saw this chart on a company's chart, I would say there's going to be continued volatility for a while yet. Okay, so let's go back to my video technical watch list. And I'm going to see if there's anything else here I want to talk about. Oh, Bitcoin and bonds. Yeah, that I completely forgot about that. In fact, let's go back to my markets video because I want to talk about Ethereum as well. So let's have a look at the daily chart for Bitcoin. And it was potentially looking a little bit bearish, just potentially back towards the start of May, but it has bounced really nice. In fact, on Tuesday, 21st of May, Bitcoin did rally, or was it then Monday? Bitcoin rallied 7.7%. Didn't quite get above $74. That's what I want to see here, or 74,000. Sorry. I want to see Bitcoin get above 74,000. If it gets above 74,000, that would be a really bullish move. And it's right now at 69,318. Pretty sure Ethereum had a really good day. Yeah, I still remember this. Ethereum on Monday, 20th of May, had or was up 19.3%. What is really bullish about this particular chart, however, is how the market has reacted after that. Instead of Ethereum prices pulling back, which would suggest that there's more supply than demand, price of Ethereum has gone sideways, suggesting demand and supply is equal. It's in balance. And there's no one rushing to sell Ethereum after that 19% rise. That is a good sign that there is some strength, or there was some strength to that rise. Even the volume, we did see some high volume coming in on the day. Not sure what caused it. I don't really follow the news flow when it comes to cryptocurrency, but a pretty good day or week for Ethereum. And overall, Ethereum was up 22.2% for the week. Probably the best week it's had since May 2021, when it was up 33.1% in 1 week. That was at the end of a major bull run. Maybe there was another week here that was up a little bit more. Yep, there was a week in August, up 22.5%. And finally, I'm going to have a look at bonds. I would assume bonds have, that's not the one I want. I'm assuming bonds have gone up a little bit. You would think they would have, based off the market's reaction to better than expected numbers in the American economy and less likelihood of interest rates dropping. You would think bonds yields have risen. You would think that. Let's confirm it. Looking at the US 30-year bonds, and not really. Well, this is the weekly chart, sorry. Not much of a rally in bonds. I don't know what's happening there. Still an uptrend though. In fact, it's bounced off the uptrend back on the 16th of May. It was a beautiful bounce right off it. So it's playing ball. The 30-year bonds still in an uptrend. You can just see when we thought interest rates were going to drop, or when we thought the Fed was going to drop interest rates 6,000 times in 2024, back towards the end of last year. Now let's have a look at these 13 individual companies' charts, and I'll discuss why I've included these charts in today's video. 6 or 7 of these companies I do own, a few of these I'm trading, and yeah, a few of these I am trading. So the first company I want to look at is PPE, People in. And you can learn a lot just by looking at the chart, price action, and the volume at the same time. I probably have told this story a few times. So I bought People in on the 11th of December on the highest volume day. And the reason I bought on that day, high volume at the end of a rapid downturn in a rapid decrease in the share price. So the shares in this company were oversold. Really big volume, not only in this day, preceding days as well, telling me or suggesting to me that the shares were oversold and there would be a bounce. And we saw the bounce almost immediately. Share price went from $1 all the way to a high of about $1.40. I had sold well before that. And that does not mean, when I did see that bounce or expect that bounce, that does not mean I thought that was the bottom of the share price, because I expected $1 to be tested again. It was tested on the 26th of February, and we didn't see much of a bounce after that. Also, have a look at the volume. I'm pretty sure they released the results on that day. Have a look at the volume moving forward. Share price didn't bounce much at all. Went up to about $1.12 or something. Went back to $1, and there's no volume. Like we saw the last 2 times, it bounced off $1. And this is saying to me that no one's interested. No one cares that People in is back to $1, unlike we saw previously. And the better chance share price was going to fall below $1. And it did. Fell below $1. And again, just look at the volume. No one cares. Volume has been dropping. And that's the telltale sign that the share price is going to keep on dropping unless there's some sort of catalyst. Now, catalyst could be some sort of support level. Catalyst could be a good financial report from the company, or a profit upgrade from the company, or it could be a takeover bid. And possibly this company is right for a takeover bid because the valuation of this company right now, markup, is $91.9 million. This is a company that generated $602 million in the last half year, not a full year, last half year. $1.2 billion in profit in the last year, and net income of $19 million. In the last half year, profit of $5 million. So I definitely think there could be an argument there is some value with this company. Well, why is the market completely uninterested in this company right now? I don't know why. The market is smarter than me, and the market is telling me right now, stay well clear of this company for now. But I wouldn't be surprised to see some value investors getting interested or excited about this company. They're just not excited right now. And if you look at the weekly chart, you can see why. Well, $1 naturally itself is a resistance level, but that was the lows, almost the lows we saw back in the COVID-19 financial panic. Share price did fall briefly to 90 cents, but recovered fairly quickly. And the high after that was $4.80, almost $5. So just imagine things are still going well for this company, and this company will grow from here. The upside from here is a 5-bagger, potentially, just potentially, if things are okay with this business. I have no idea. So probably one of the reasons I've included this chart is just the volume. I love volume. Volume with price action can tell you a really good, well, not a story. It can tell you what the market is thinking. It can tell you the psychology of the market just by looking at volume. And talking about volume, the reject shot. Okay, so this is a trade I did make back in late last year. So I did look at the share price was trying to move into an uptrend. And then we saw not all the interest in this company back when the share price was about $5.80 in October last year. And then we saw the share price struggle, and I sold out of my trading position. And I just saw not much interest in this company. I would have thought, with people struggling with the cost of pressure living, a company that sells stuff cheaper than other places would be successful, but no. And then the company released something really negative in February, which would have been their results. Share price on that day dropped 15.6%. In my opinion, that is a get out instantly moment. Massive drop in share price. And just look at how the market has reacted since then. The share price going sideways a little bit, no bounce. That's the other thing. There was no bounce. So no one was excited the share price had dropped by that amount. There was a small bounce the next day, but share price moving into a downtrend. And I'm pretty sure the company did release something negative a few days ago, and it's just like the share price is free falling here. But also have a look at the volume. We are starting to see increase in volume, but I think that was on the back of the negative announcement they released a few days ago. And the other thing to notice here, ever since that announcement, half-year results or full-year results, 22nd February, look at the increase in volume after that. And that really matches with the decrease in share price. So this is, I wouldn't say capitulation, but this is fund managers just getting out, just selling on market, whatever. And that just forces the share price down. So there might be a little bit of demand, but there is just a rush of supply onto the market. And that's why the share price is dropping a pretty big volume. No idea how low the share price has to go. Is there any value in this company? No idea. Market cap $130 million. Says the price earnings ratio is 16.5, no dividend yield. Maybe that's the reason why people are getting out, because there's no dividend yield or no dividend. Weekly chart, still a way to go before the share price gets to the lows we saw in June 2022, or even the COVID-19 lows or the 2019 lows, which were below $2. So there still could be a fair way to go for the reject shop. I'm just surprised that this company's not that successful. I thought this company would be successful, but it's not. Now onto volume. Talking about volume, there's a company called Gratifi. Well-defined downtrend. No, you can't argue that. Well-defined downtrend, probably downtrend happening for ages. No idea what this company does. I think I've done maybe 1 or 2 videos on this company, but market cap 14.5 million. Company does have revenue. In fact, yearly revenue. No, that's yearly revenue of $30 million, increasing from 11 the previous year, and 3. It's gone from revenue's gone from 3 million, 11 million to 30 million. That's pretty good growth, but unprofitable. Gauges in the provision of customer engagement technology, that blah blah blah. Sounds like some sort of software company, maybe SaaS or something like that. No idea. That doesn't matter here. So the reason I've included Gratifi on this particular video is the increase in volume we have seen in the last few months. A pretty noticeable increase in volume as well. And that has also coincided with the share price starting to increase as well. So there has been a little bit of interest in this company in the last few months. So what has caused that interest? I have no idea, but someone is interested. You could say follow the money in this sort of thing. And there is definite argument. When you see the share price in a downtrend and not much volume, there's more likelihood the share price will keep on dropping. But when you start to see volume increasing, there are people within the market saying this company potentially is good value at these prices. And possibly that's what's happening with Gratifi. Now, share price got as low as 0.4 cents. So that's automatically a no for me. But right now the share price is around about 1 cent. No, 0.9 cents. So even at a 0.9 cents, I will stay clear, but I have to take notice of this volume. There is interest in Gratifi, and just that revenue increase has me intrigued. Prenti is just popped up onto my radar yesterday. I did a little bit of a screener, and this company has just got to a 3-month high. That is one of the screeners I do use. I do prefer 6 months high, but I look at a 3-month screener because you get the first signs of company. Because you can't get a 6-month high if you don't have a 3-month high or even a 1-month high. I also have a 1-month screener, but I do like the 3-month screener. And Prenti just popped onto my radar at a 3-month high. Last time share price was this high was the start of January. So we are talking about 3 months ago, over 3 months ago. I wouldn't say the share price is breaking out. Share price is trying to move into a short-term uptrend. If we do see the share price continue to climb from here, I think there is probably an argument that this company is moving into an uptrend. So this will be the first time I have had Prenti on my watch list for quite a while. And when I say while, probably since September 2022. Prenti. The other thing is volume. I always say volume, so sometimes I won't talk about volume. Another good volume, very weak volume. That's probably another, maybe a little bit of a red flag. Not a lot of interest in Perenti, even though share price looks like it wants to get higher. If we see the share price rise on really good volume, that could be a good sign. Uh, I am trying to stay away from story stocks. So the next company I'm going to show you is probably defined as a story stock, but the chart looks stunning. And this is a sort of pattern I'm always looking for. So even though this may not be the company for me, doesn't mean it can't be the company for you. And this is the pattern I'm looking for all the time, particularly with non-story stocks. So Aurora Labs, don't even know what they do. Are they a 3D place? Industrial technology and innovation company which engages in development and commercialization of 3D metal printers. There you go. There's a few companies in this area that have been doing well recently. Anyway, so two things I look for. So share price in a well-defined downtrend. There's no argument about that. Share price then starting to base, go sideways, definitely the end of uptrend back in late 2023. You could even argue that share price was trying to move into an uptrend in March or April, and then we started to see some big volume coming in, some spikes in volume. And even surrounding those spikes in volume, there were some days that had much larger volume than what you usually see for this company. And when I say usually, I'm talking about back-to-back days. Sometimes you will see little spikes in volume, but it's usually just a one-day spike. And that really coincided with the share price taking off. And the share price has gone from about 3 cents up to 6.6 cents in a short period of time. So there is someone liking this company, A3D. I love the chart for Aurora Labs. I just don't know about the company. So let's have a look at the current, most recent cash flow report from the company, their Appendix 4C, just to see if there's any substance in this particular report. And a lot of information here. So if you want to know anything about the company, just go to their Appendix 4C. They've got about 5 pages of information there. Receipts to customers $59,000. So not quite yet. But the market likes something about Aurora Labs. Is it? Let's have a go back further, 3 months. They did a couple raising, MCP prototyping IP update, 15th of April, successful manufacture of gas turbine engine, 8th of April, defense engagement update. So maybe a few of these announcements did excite the market. So we're talking about 20th of March, 8th of April. 20th of March, no much reaction. 8th of April, that did cause a little bit of reaction, but there was selling on that day. And then the 15th of April was just after that. So this rapid rise in share price really has not correlated or coincided with any significant announcement from the company. Now on to the 8 companies I do own. And I'll talk about why I've included these companies in this particular chart. So OFX Group, company released, so was it results? Share price rose 17.8% on the day. I took a position on the next day, or the next day, I forget which day, and this is a breakout. Simple as that. And I thought to myself, instead of picking and choosing which breakouts to play, why not play most of the breakouts and then sell those breakouts that don't work out and maintain breakouts that do work out? Because not all breakouts work out. And this is a breakout, and this is exactly the sort of breakout I'm looking for. So positive financial news. Share price increasing to at least a 6-month high. It's 6-month high and high volume. Look at the volume. Pretty big volume on that day. And not only that, on the Friday, when we saw overall weakness in the market, share price of OFX Group actually rose by almost 2%. So I'm not sure if this will be a successful trade. I don't know. That's the whole thing. I have been picking and choosing. Oh, this is a breakout, but I don't really like the company, so I'm going to stay clear of that one. I have ignored a couple of breakouts. Bendigo Bank, thinking of you, and Incitec Pivot. That's another one. Anyway, so this is the breakout I've decided to play, even though I am saying I'll probably play most breakouts, but OFX Group. Another one I did breakout I did play is Nuix. This is another one where I have been trading this way back in July last year. That was another breakout. Not an absolute breakout, but this happened on the 20th of July. Share price on that day rose 37%, but it wasn't a 6-month high, barely a 3-month high. but it was just really good financial news on really good volume. Played that, and that was the start of the uptrend. Perfect, perfect inflection point for this company. That was the time to get in. Unfortunately, I took profits, and I am shifting what I'm. I want to shift what I do. I sometimes have taken profits too early, and this is another company where I took profits too early. There was no reason to sell. The only reason to sell was back in January, but still the share price was in an uptrend. Never stopped being in an uptrend. And if I didn't sell, this would have been a three bagger right now for me in less than a year. So I've now I've never taken another trade position in Nuix, and again, just like OFX Group, share price rallied on Friday, up 2.7% when the overall market was down. That's a good sign. Redox is a chemical company, chemical manufacturer, recently listed on the ASX. I had a look at this company and I went, I don't mind this company. I think this company actually looks okay. Expanding overseas, a global company, I think it will be a pretty good global company in the future. And then I just noticed on, which day was it? The 15th of May, the share price dropped 5.5%. Not much volume. It's just a bit of a one-off dip. And I took position next day at $3. And the share, it's sort of a buy the dip situation. You see the share price rallying, share price dipped, buy the dip situation, the share price has taken off again. So yeah, this is a trade for a company that looks like it's moving into an uptrend. P ratio 20.4, but I just think the possible growth in this company means it could be a good medium to longer term trade. So I'm still trading it, but I hope to own this company for a few years, maybe hopefully 5 years. If I'm owning this company for 5+ years, that means the share price is significantly greater than it is now. But if the share price starts to go down, sell out. The last 5 companies are companies I've owned for quite a while, and it's a new thinking. So what I usually did in the past is if I took a trading position, the share price rose, more than likely I'd take profits. Now I'm reversing that. Instead of taking profits, when there is a breakout in the share price, just like I was talking about with OFX Group and Nuix, instead of taking profits, which I have done in the past, add to the position. Add to the position. And we can just see, just by these charts, why that is a possible play. So this is Findy. So I found Findy for many, many years. I actually did take profits because this was my largest holding. And even that, I'm thinking now, was that the right thing to do? Taking profits just because it's my biggest holding. Because why? Look at the chart. There's no reason to take profits. The company released their results on Tuesday, 21st of May. Share price on that day popped up 24%. And share prices kept on going up. In fact, the share price rose 4.3% on Friday. I did not add to my position in this company. I have added to Southern Cross Electrical Engineering and Integrated Research, but I'm now thinking, why not? This is exactly what I'm looking for. Really a breakout. This is not technically a breakout because the share price was in a really good uptrend, but this was good financial report, high volume, and the share price at an all-time high. Maybe not an all-time high, but a very long-term hold, long-term high. Same thing with Gentrack. A really good result from this company. And just look at the chart or the share price movement from that. Monday, the 20th of May, share price rose almost 20%. Share price went sideways the next 2 days. Share price then rose another 4.5% on the Thursday and flat, virtually flat on the Friday, up to $9. And as I look at this chart, I probably should have just bought either on the day they released the results, the Monday, or at the very least the next day, or even the next day, because share price, there was no selling, no selling. That's what I'm looking for, selling, signs of selling. There's no selling because share price of Gentrack is now at an all-time high. So you don't see any resistance because share price is at an all-time high. And this is another beautiful chart. Another chart, another company where I've taken profits along the way, and there was just no reason to take profits. In fact, I bought shares in this company at, it was $1.20. This could almost be a 9-bagger for me if I didn't take profits along the way. It's still a pretty big holding in my portfolio because it's gone up a lot. It's one of my biggest holdings. Superloop. This is one I was really thinking of adding to my position. I bought at 80 cents. I did take profits again because there was a takeover bid or possible takeover bid from Aussie Broadband. And one of the things I do, one of my rules is to take profits if there is a takeover bid. But I did not sell completely because I did not think that takeover bid was ever going to get through, and I don't think it will. And as I was looking at this chart, I just noticed share price going sideways. And then we started to see a upwards pressure on the share price as it moved into the short-term moving average channel. And yeah, the share price is starting to creep higher. So this is another instance where just adding to my position could be beneficial. And that is one thing I'm really thinking about. Instead of looking for new ideas, just add to my winners. But they are moving up for a reason. And finally, Technology One. So this is a company in my long-term portfolio or my quality portfolio. And this is another thing I'm thinking now is trading more of companies within this portfolio when the chart tells me to do it. And the company released their results on Tuesday. Share price didn't break out that day, but broke out the next day above the top of the trading channel, this consolidation zone at about $17. And it broke out on fantastic volume. In fact, the volume on that day when it broke out was higher than the day they released their results. That's a good sign. Now, the share price sort of gone sideways, but this is definitely an opportunity to maybe trade Technology One and eventually just sell Technology One when this trade finishes and add my profits to my long-term holding. That's what I'm thinking of doing. One of the reasons why maybe I wouldn't do it is Technology One is overvalued, in my opinion. But just because I think it's overvalued doesn't mean it is. Yeah, just look at the really good volume coming in. So someone is really happy with their results, and the share price has broken out to a new all-time high. Okay, lots of interesting, exciting things to do and think about over the next few weeks for me. Slightly adjusting how I trade, thinking more about adding to my position instead of taking profits, that sort of thing. And that's all I have for today's video. If you have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.